Big tech among the, I'm looking up ARC quickly. It was a big day yesterday, up 3 to 108. That ARC ETF, which we watch now, is kind of a bellwether. But the stocks leading the markets, broad markets higher yesterday with technology. For more on renewed interest in tech and on what's currently working in the markets, we're joined now by Megan Horneman, Director of Portfolio Strategy at Verdance Capital Advisors, and Daniel Flack, Senior Research Analyst at Neuberger Berman. I can't wait to get to you, Megan, and because you have a more nuanced view overall, and I want to talk about what you see as some of the risks in front of us. But Dan, just reading what you look, your analysis is pretty simple here, and it's bottoms up, and it's you buy the best tech stocks that are around in terms of prospects and coming out of the pandemic and all the things that we talk about all the time. You think that whole narrative is still in play with the big ones? Which ones?
Joe, I think it is. It's driven by innovation. It's driven by execution on product cycles and ultimately delivering value to customers. So if we look at the longer term trends around the cloud, mobile, this build out of the digital infrastructure, those remain healthy. So to take a company like Amazon, which is a pioneer in delivering cloud services, clearly e-commerce is strong. Another one like Apple, which is executing well on product cycles like the iPhone. We'll see more about how they're continuing to innovate at their developer conference next month. And then maybe to mention a couple of others like Cisco, which is an enabler of these next generation networks. And the company's doing very well in key areas like security. And I'll round it out with Intel, which remains a strategic partner to its customers. I think that the new CEO, Pat Gelsinger, is going to provide more clarity on the product roadmap and help drive better execution. So a lot to like here, I think, over the next couple of years.
All right, we'll come back and get some of your other favorites. But Megan, what was interesting in reading your thoughts, I think you're a little bit uncomfortable with some of the valuations overall in the market and some of the risks ahead. You think maybe mid-cap and small caps better. You think maybe some international exposure might make more sense. And you're also worried about primarily worried about some policy mistakes, which not everyone talks about right now.
Scenario is that the economic growth will continue over the next couple years. It's going to be choppy here in the intermediate term as we start to get past that COVID aftermath. The areas we like of the market are still those ones that will benefit from the global economic rebound over the next couple years. So that really does tilt to the cyclical sectors over the more expensive tech and growth sectors. International, we like international because it's lagged for a significant amount of years. Its evaluations are more attractive. And remember that not only do they stand to benefit more from global trade, but they are much more cyclical in nature. So that's why we like the developed international. And yes, you're right. The one risk, actually a couple of risks that we're looking at, the first one is policy error. And everybody focuses on monetary policy error, but don't forget about government policy error as well. And we're seeing that right now in some of the labor shortages we see in the economy. We need to get the government out of the way. They've done the job that they needed to do to help bridge the gap between COVID and us returning to some sense of normalcy. Well, now we're starting to get to some sense of normalcy, and they need to get out of the way and let the economy start to function again.
And just to break that down and drill down on that, do you think that you're worried about too much stimulus maybe running too hot right now, or is it that you're, as you mentioned, labor problems as people have no inducement maybe, some people, to come back to work? Or are you talking even longer term that we've just spent too much and that there will be a day of reckoning longer term in terms of inflation with all this stimulus? Both, you talking about near-term and long-term problems?
I think the most immediate one is the near-term problem that you mentioned. The unemployment benefits that have been extended by the government have done wonderful for some people, but at the same time, it has also resulted in some businesses not being able to find employees. The other avenue from the fiscal or the government side is that we need to get fully reopened. We have to get capacity restrictions lifted as well so that these small businesses, the ones that got hurt the most, can get back to fully reopen and then get back to their full employment that they had prior to COVID.
So you're not even talking about taxes or capital gains increases. None of that stuff is part of your front and center worries about the future? You think all that's going to be okay, as well as the size of these programs?
Right. So I think that, as I mentioned, the immediate concern is the ongoing stimulus that I think we can start moving from. But obviously, yes, a longer-term taxes, how we deal with the debt, that is something that's concerning as well.
Dan, your top 5 holdings are, and you're not thinking about any of this stuff. You're just thinking about, wow, these are great companies, right?
Joe, we always incorporate the dynamics around interest rates. Obviously, a lot of the companies are facing cyclical headwinds. They're bottlenecks in key areas of the supply chain, which are impacting semiconductors. All of that gets incorporated into how we look at these companies and try to think through which ones are going to be able to deliver value to their customers and ultimately their shareholders. But if we look at companies, for example, like NVIDIA, which is really a leader in the field of artificial intelligence, what they're able to do in terms of helping their customers with drug discovery, as an example, is extraordinary. And so while a company like NVIDIA might get impacted in a more difficult economic environment, which clearly we are in, we think as the economies begin to recover, that story is going to remain interesting. But again, it's going to come down to innovation. Another company like Alphabet, which is also a leader in building out digital infrastructure, both in terms of serving consumers with search and maps, as well as the enterprise with the Google Cloud. These companies, of course, are subject to the economic forces, but it's the innovation that's going to be able to drive their futures, in my view.
All right. Dan Flack, Senior Research Analyst at Neuberger Berman, and Megan Horneman, Director of Portfolio Strategy at Verdance. Thank you both.